So yes, you did read the video title correctly. I am back buying Hims and Hers stock. The first time I bought Hims and Hers since October 2023 when the stock was only $6. And obviously since then it's been a very good performer for us, for me, the YouTube channel, some of you guys as well I know own the stock. But recently the stock has had a bit of a fall and I have rerun the numbers and I'm actually seeing even bigger numbers now for the return than where I saw them a year ago, 2 years ago, which is kind of crazy to think about. And today I thought I'd just give you an updated where the stock is at, why the stock is having a dip, and also some numbers that I think the stock could do in the next kind of 5 years. And obviously, you know, it's crazy now because obviously Hims and Hers was only really mentioned on this YouTube channel. Like, we are kind of like the OG Hims and Hers channel, and now whenever I go on YouTube I see just so many other stocks kind of talking about stock market channels talk about Hims and Hers. And obviously, you know, to think about, you know, back 2 years ago, like there was nobody talking about this stock on the YouTube channel. I think I was probably the first person to cover it on the YouTube channel, and now obviously there's a lot more people interested. But yeah, it's a good opportunity again, so we're going to go through it today. Hope you enjoy it. Hit that like button, let's get started. Now, if you do want to see when I do buy any Hims and Hers shares or sell them, obviously we've sold some as well previously while the stock was running up for like 300% return, then the place to be is on the Patreon. You get to know what I'm buying and selling in real time, only £5, and you also get 2 exclusive videos a week on there. And also, if you do want to buy some Hims and Hers shares, join the link for Trading 212. That's personally the investing platform that I use, and obviously the investing platform I buy my Hims and Hers shares in. Anyway, I was looking on YouTube the other day, and we see here that I've got a lot of coverage on Hims and Hers. But this video from 2 years ago, and I said Hims and Hers is this $4 stock is on fire. And I actually watched a bit of it, and what made me laugh about it is that this is when obviously when the stock actually started bringing out mega earnings, and the stock. Do you remember when that time when the stock brought out them 10 out of 10 earnings? And you can even see it right now on the screen, like the stock popped up 20%, and then it used to just give it all back and end up negative on the day. I don't know if any of you guys used to remember those days when them 10 out of 10 earnings came out, and then the stock used to absolutely collapse. It was a really frustrating time. Obviously, there was the kind of 2022 bear market, and we are out of that now. But it just shows you, doesn't it? You know, sometimes the stock market only a year ago, 2 years ago goes, oh, this stock's a $4 stock, and then obviously from there it's, you know, from $4 it's ended up being a $16 stock, nearly a 5-bagger. But look at the stock, I mean, it's still performing quite well. You know, the stock is still up 41% year to date, but really since July time, which isn't even really that long ago, the stock's fallen quite a bit. And since June time, the stock was actually a $22 stock. It's actually fallen nearly by half. And you're thinking that's quite a dramatic fall in quite a short period of time. You know, to lose nearly half your market cap, half your value, you would think there's something significantly going wrong with the business. And for me, there isn't. I think maybe a few people have just got a bit caught up in the hype. People are trying to make quick money. People, a lot of Wall Street, they're trying to guess where the stock's going to be in 2-3 months time, are kind of jumping on the bandwagon. And I think really, if you're a long-term investor, like, you know, if you've been holding it for the last kind of couple of years, I think this is maybe another opportunity to go get some shares at some good value. And that's what we're going to talk about today. Now, financially, the company has absolutely smashed it. The last earnings, actually, this isn't even the last earnings. This is Q1 earnings. I'm a little bit behind there. But if we go on the last earnings, if I can find them very quickly for you, they were actually amazing. We had another mega EPS beat, as you can see here. Revenue growth of 51% year over year, which is very impressive. Subscribers up 43%. And once again, we have a major upgrade on the guidance. You know, it was a triple beat. They just keep beating and beating numbers. And this is the great thing that we've had from Hims and Hers, is they just carry on beating numbers. The management team sets out low, well, not low numbers. They're already quite impressive numbers. But they consistently sandbag and then over deliver, which is an amazing thing to be owning as well. And what we're seeing as well inside all the company's metrics is the metrics are just getting better and better and better. The profitability is ramping up, and now we're talking about a company at 66 times earnings. I tell you guys, you know, a 51% year over year growth company at 66 times earnings is obviously quite attractive, but as well as that, it's going to very quickly grow into that that valuation. You know, the big thing about stock market investing is all about being future thinking. You know, you're looking at 3-4 years. Am I right now getting a cheap company for what they'll be doing in 3 or 4 years? And I think that is the case for Hims and Hers, especially with the numbers they're doing. But let's just go back to basics. You know, what does the company do? Well, it's a telehealth service. So telehealth is a key. Obviously, there was a big boom during 2021, but it's only continued, and especially with the younger generation, because what they want is more personalized health. They want to also get easy access to the platform. So people don't want to travel to the doctors nowadays. They don't want to go into the place where the people are coughing everywhere and you got to travel to it, and then you got to wait around. People just want to log on the phone, easy access, get your subscription nice and easy. If you want to see a doctor, just put it on your phone. You can carry on doing jobs around your house. You don't have to travel and get that easy access. And the other thing is affordable. People want cheaper healthcare, and especially in the US, and that's what Hims and Hers is able to provide to a lot of their subscribers. And if you look at some of the markets they do, a lot of the markets have like SH, dermatology, mental health, weight loss, which are big, major categories. You know, these are multi-billion categories that they have here, and there's potential for them to carry on expanding into these categories. One of the new ones they've recently launched is the weight loss. This was a new category they launched this year, and was the target to get to 100 million in revenue, and it's already there in this time frame. You know, this was supposed to take a year to get there, and they've done it within like half a year, which has been very impressive. And obviously, when you're only taking, even if you only take a percentage of a multi-billion industry, that's how your company can still be a very big company. When you're having these big market spaces like a health industry, for example. And when you look at the numbers, they've executed to perfection. Subscriber growth is up 41%. Revenue growth is up for, this is for the Q1 numbers, by the way, and we've just seen that we're actually growing 50% in the last quarter, 46% in the last quarter, 8.4 just EBITDA margin, which if you look at the improvement from last quarter is very good. 90% of reoccurring revenue as well. Lovely having a SaaS business. You know, SaaS businesses normally trade at a premium as well. Gross margins 75%. That's why they're able to make so much profitability, and under a 1-year payback. And if you look at the growth, I mean, look at the growth here. The quarterly revenue growth has been very impressive. Just a nice staircase upwards, very high gross margins for those profitability. And if you look at the adjusted EBITDA point of view, look at the ramp up since we talked about the video from when we were talking about when it was a $4 stock. Look at the profitability that's just been ramping up, and they just see more and more improvement. You know, you look at the longer term outlook of this year, they've hiked that up, and you know, at the start of the year, analysts were expecting this company to grow like 20%, and at some point this growth will slow down, but even now it's just absolutely insane. And the thing is, you know, look at the guidance here. It's the guidance they're doing for the next quarter is just so much higher than the full year guidance, so it's going to get hiked up even more this year. And adjusted EBITDA margin as well, you know, you look at that, and you look at the long-term guidance. You know, long-term guidance is 20-30% adjusted EBITDA margins, and if you look at what they're doing right now, which is our forecast to do around about 10% at the moment, you know, that is where the profitability is going to come through. There's going to be very high profit margins, and they still think from here they can you know, double and even triple the adjusted EBITDA margin. So there's going to be good amounts of profitability coming off this business. If we look at the past performance and the future performance, you can see the execution here. Just look at that revenue growth, just look at the profit growth, look at the free cash flow that's ramping up on the business. By the end of the year, you know, what we're like 5 months away, we're going to be talking about a company that's nearly doing 109 million in free cash flow. Obviously that's very good, and that should just continue. And because obviously they're throwing off that profitability here, we're going to have a nice profitable business that puts a lot of that cash onto the balance sheet, and they've got no debt. Cash balance wise, they sit on a really healthy cash balance of 227 million. That's why they're able to do things like share buybacks that they currently have going on right now. And ownership wise, a few people criticise the owner, Andrew Dunham. I think he's done an absolute fabulous job here. This company is something like 7 years old, 8 years old, and you look at what he's doing, he's absolutely amazing. He still owns 8% of the business, and it's a founder-led company, and hopefully that continues. So everything here is looking very positive. So what are the like negatives? Why is the share price, you know, down nearly 40-50%? There must be something in there, and I kind of hinted it at the start, but I think there's a few people that are getting in here for short term and rather than long term, and that's what's been causing the pain at the moment. And a lot of that volatility comes around this, the GLP-1 injections. So if you don't know, there was a new weight loss product launched, which was the GLP-1 injections. Basically, you go get this injection and it makes you not feel as hungry. And what that ends up doing is you don't end up eating as much, and it's not like the normal kind of weight loss programs where you have to actually do some sort of exercise, and it's getting very popular because if people can have these injections. It's proven that it helps people lose weight. As far as we were mostly aware, it's a safe product, and we've seen a lot of celebrities at the moment. A lot of celebrities have come out and said, "Hey, the reason why I've lost a lot of weight is because of these injections." And a lot of this is produced by a company like Eli Lilly, for example. And what happened is because the products were so popular, what Eli Lilly had to do was actually let other companies make this weight loss product, which obviously Hims and Hers started doing. Now, what has happened recently is they've come out and said, we think that the drug shortage is at an end very soon, and for a company like Hims and Hers that have had access to it, people got excited. You can basically see where the announcement came out and the stock actually rallied up huge for it. A lot of people that are short-term thinking went, oh, this is going to be major for Hims and Hers, and got carried away with it. And now we've seen that the potential shortage is going to come to an end quite quickly. If all them people that jumped in the hype are jumping back out again. And I think what has happened is the stock has actually gone that low that it's actually quite attractive valuations if you're now a long-term investor. A lot of people, people panic when the stock goes down, but there'll be some people that jumped in here and actually sold it for quite a big loss. And I think that that's actually created an opportunity, because what people are ignoring is they've got caught on this GLP hype. They're not looking at the fundamentals of the business that are just improving ahead of expectations. And what frustrates me a little bit as well with the GLP-1 side of it is that people maybe got carried away with this. We always knew this wasn't going to be a long-term revenue driver for the Hims and Hers business, so it's not something that should have been considered. And as well as that, when you look at the recent earnings for Hims and Hers, the company still grew 44% year over year without this GLP-1 in the latest quarter, and the GLP-1 only makes up like 4% of the revenue growth of this business. So even if that was to disappear of the business is still having fantastic numbers without this here. And I think that just so many people got caught up in the short term that people are forgetting how good of a company this could be in the long term. And just to show that, let's have a look at some numbers. Now, I actually think the numbers are even higher than where we were when I last did this video. So when I last did the Hims and Hers numbers in 2013, the numbers are actually that higher now than what I was expecting, that the upside is probably even higher than when I did it in 2023. Now, I'll put revenue growth of 18, 22, 25% in. Now, this company is still growing 40+% a year. So I'm assuming a big slowdown in the revenue here. So the numbers that I'm even putting in are quite sandbagged at the moment. On a profit margin point of view, I put 5, 8, 12%. Now, I think they can easily, obviously we saw 20, 30% adjusted EBITDA margins. I would expect them to get to 10% profit margins easy. Now, the only number that's above a 10% profit margin is the high side. So I've even been conservative on the profit margin. I put 20 times earnings in, which once again, I think if you're a company doing these numbers, there's no way you're going to be trading at 20 times earnings. But I went with the market multiple. We'll up that in a second. Now on the low side, yeah, I mean, if they did these numbers, I'd be so disappointed with them. But you're only down 10%, which isn't terrible. Mid-side, 100% upside, which is what we look for when we buy a stock. In my opinion, that's what I invest for, is 100% return in the next 5 years. And we are getting that on the mid-side, and on the high side, we're getting some nice upside there. Now, like I said, I think these numbers were a little bit conservative. So I think the company can realistically grow at 25% in the next 5 years on a CAGR basis. Obviously, I think the first couple of years will be at least 30+% revenue growth. By the time we get towards maybe the back end of the next 5 years, that might be getting towards the lower 20% growth. So I think 25% on will be a good kind of guess. I think I'm going to stick with that. 12% profit margins, I think they are definitely achievable in the business. I'm not going to change that at all. Now on a multiple, I think the company will obviously do, if they're doing these numbers, for me, it's not a 20 times earnings business. I think it's going to be higher. Now let's start off with a 40 times earnings. You've got nearly a 600% return on the stock. But I realistically think, you're at least going to be talking, this company trades at like 60 times earnings on these numbers. And you're getting nearly a 10 bagger right now on those numbers. Now, there's a lot of assuming that the numbers go to perfection, and that's obviously not always the case with investing. But realistically, I do think they'll be on this higher side. And like I said, on the very bullish case, I think we could be staring at a Hims and Hers 10 bagger here. And even if I didn't have a position, I'd be buying. Obviously, I've still got a position, but I'm willing to average up here because I think the upside is still looking very attractive. And if anything, why would I not want to buy more of this winner? What's the old saying? Water the flowers, trim the weeds. Don't don't be trimming the flowers and watering your weeds in your portfolio. If you've got a winner in your portfolio, keep backing it. And I look at Hims and Hers, and it's probably the stock in my portfolio that's executed to the perfection the most. Every single quarter I look at them, I just think it's even better than what I expected. It's another 10 out of 10 earnings. The EPS is just higher than what was expected. The revenue was higher than expected. They hike up the guidance again. They've got an amazing balance sheet. You think about we talk about the profit that potentially could be throwing off in 5 years' time. 500 million, they could be throwing that into dividends or share buybacks. The opportunity here is just enormous, and I think just why not buy more? So over the last kind of year, I've took quite a bit of profit off the table because I've been up on this position, quite an attractive amount at times. And the position is still a big position. It's my second largest position still, but I've took profit off the table. And I think now is the time where I put some of that back into the business. And, it's my second largest position, but realistically, can I see Hims and Hers come in my largest position? Yeah, I think so. I think that what I look at here, the number wise, it looks very attractive, and I will continue to buy more. So yeah, I am making a video today saying that I am back buying Hims and Hers shares for the first time since October 2023, and thought I'd make you guys aware of that. I hope you enjoyed the video. If you could hit the like button, if you're new around here or you've been a long-term watcher, make sure you subscribe. We're very close to the 16,000 subscribers, so if you can get me there, that'll be absolutely amazing. Apart from that, I'll see you in a bit.